Senator, the tax plan, the Republican tax plan, the CBO estimates that those making under $30,000 a year, they'd be worse off by 2019. Those making under $75,000 would be worse off by 2027. Let's take those making under $30,000. How do you explain to them that this tax plan is fair for them?
Well, what it shows is that because of the way the individual health care mandate is scored by the budget process we got to use here, that some of those people are not going to get as much tax credit, refundable tax credit from the government for their health care, and some of them will not choose to be on Medicaid. So those making under $30,000, the vast majority of those folks, as you know, have no income tax liability. The question is how much of a refundable credit. I don't agree with what the CBO has said with regard to the individual mandate. In fact, they're changing their own model now. I'm not sure that somebody who is offered Medicaid is not going to take it, which is not a cost to that person just because there's not an individual mandate, but that's what they say. So that has to do with health care. Otherwise, those folks, of course, do get tax relief because we double the child tax credit, we double the standard deduction, the child tax credit refundability is increased. And for someone making $50,000 a year, there's a tax cut in here of 36% for a $50,000 family with 2 kids, 36% tax cut. Look at the Joint Committee on Taxation numbers. $85,000 a year, there's a 20% tax cut. Yes, it does expire over the 10-year period, but so did the 2001 and 2003 tax cuts. That's typical. And Congress chose for about 90% of the people, as you know, to extend those tax cuts. So that's what I hope will happen again. There also will be an opportunity on the floor of the Senate to make those tax cuts permanent. And if 8 Democrats join the Republicans, that will happen.
I'm glad you brought up 2001 and 2003. You weren't a member of the Bush administration then, you ultimately were, but you were a big supporter of those tax cuts. One of the things about them is they cut taxes on everyone. Everyone saw tax cuts. Some saw bigger tax cuts than others, but everyone saw a tax cut. With this plan, many people will see tax cuts, but there will be some, in some cases, many in many places, that will see tax increases right away.
Well, I think if you look at this, again, from an objective point of view, look at the Joint Committee numbers, which is the nonpartisan group up here, jct.gov, go on and check it out to your viewers. What you'll see is that for every single income bracket, and there's 7 of them now, there is tax relief. So on an aggregate basis, there's huge tax relief. The biggest issue you're pointing to is the state and local tax issue. And you're right, particularly people at the higher end, this goes, it's a regressive tax in the sense that over 50% of the benefit goes to families making over $200,000 a year. And for states like New York and states like California, not having that deduction any longer does kick some of those folks who are upper middle class or high income folks into a situation where they don't get that deduction. But there are 2 things they should take into account. One is the alternative minimum tax takes that away right now, and we're repealing the alternative minimum tax, which is a complication, so they don't actually get that deduction often now. And second, the fact that this is a philosophical question, I guess. Should the federal government be subsidizing states that are relatively high tax? In other words, should you get a benefit in a high tax state? Or should there be sort of a level playing field here where my constituents in Ohio, who have an average state and local tax deduction of about $2,500, be paying to subsidize folks in New York County who have an average of $25,000 in terms of their deduction? And so it's a philosophical question.
I understand. And they say, by the way, the New Yorkers, the New Jerseyans, Californians say that they are overtaxed as it is. They pay a greater percentage in federal taxes that then gets distributed to the rest of the country. That's their argument. I do want to say, because you pointed to the Joint Committee on Taxation, their website, I want to draw people's attention to your Senate website, where you talk about the national debt. You've been a crusader against deficits and debt for some time, and you note that the nearly $20 trillion in debt now, if they were $1 bills, would cover the entire state of Ohio, 1.77 times. It would fill the Ohio Stadium, the Horseshoe at Ohio State, 9 times over, and it would buy the Cleveland Indians and Cincinnati Reds 11,000 times over. These are great numbers.
That's on my website, yeah.
They're on your, it is. Yet you're going to vote for a plan that actually increases that debt by more than $1 trillion.
Well, I don't agree with that. I think it will actually decrease the debt. And by the way, it's not the only answer. Obviously, you have to restrain spending. But if you don't grow the economy, John, you're not going to be able to get out from under this. And I strongly believe that the 1.9% economic growth number that we have to use, again, under the budget process, is wrong. I mean, I think this tax relief, because of the changes, frankly, on the business side that help workers become competitive again, You know, we have the highest rate in the world among all the developed countries on our business side, and that's driving jobs and investment overseas. Three times as many U.S. companies have been bought by foreign companies in the last year than the reverse. So this is going to really help on economic growth. There's a good letter yesterday by the Hoover Institute on this issue. It's going to increase economic growth. I believe in this strongly. I mean, I've been fighting for this for many years.
Did the 2001 or 2003 tax cuts, did they reduce the national debt?
Well, they were not focused on this sort of pro-growth policy. You know, as you know, they didn't go into the business side. They focused on the individual tax relief, which is very important. But this, for the first time in 31 years, we are actually doing the major reforms. It's not about tax cuts to me as much as it is about tax reform. And if you do these tax reforms and do them right, there's no question we're going to have more economic growth. And again, the projection we have is 1.9%. We just grew at 3% and 3.1% the last 2 quarters. Projection out yesterday I saw showing 4% growth next year from this is an independent group. But if you do that, there will not be any increase in the deficit. In fact, you'll have a decrease in the deficit over the next 10 years. And that's what I hope happens. And this has been bipartisan in the past, by the way, doing these kinds of reforms we're talking about. Because unless you do these kinds of reforms, we continue to lose jobs and investment overseas. And if we do them, we can actually bring back a lot of those earnings that are trapped overseas. And that'll help the economy a lot and help increase revenues.
Senator Rob Portman of Ohio, we're out of time. Great to have you with us,
Thanks, John. Thanks for having me on again. Take care.